Hello, everyone, and welcome back to Sudden Wealth. I do hope you're enjoying your Saturday, spending some time with the family, friends, or with your spouse. It's all good and nice to talk about assets, the financial world, etc. But the time we have with our people is the most important of them all. If you do enjoy the content, please consider dropping that like and subscribe. The channel is growing very well, so thank you very much for your support. Now, today it will be only one video, and it will be to discuss what I've been asked several times in the comment section. What would be my exit strategy? Let's say things go as I predict, things goes as I expect. But now we are approaching 2025. It's now time to consider taking some off the table, or eventually everything off the table. What would I do? Now, I've made a video many months ago about this matter in specific, but I wasn't very clear on to which assets am I planning to de-risk into. And by the way, I want to make something perfectly clear. This is not financial advice. I'm not telling you what to do. This is what I'm planning to do at this moment. This can change in the future, depending a bit on the situation of the world, of course. But this is also dependent, based on my financial situation, on my the jurisdiction that I live in, and the tax code of that jurisdiction. So what I'm trying to say is, depending on where people are in the world, one thing can make a lot of sense for one person and can make zero sense to the other. So this is something that you should always take into account, and also you should try to research and become your own leader rather than blindly follow people on YouTube. This is one of the big problems of our society, is that people tend to follow blindly anything that anybody says on YouTube, like they are, the holders of the ultimate truth. Now, I do have three scenarios: the bear, the base case, and the pie in the sky scenario. Okay? Now, the bear case is this: everyone is expecting Bitcoin to reach and surpass 100,000. So let's say we don't. Let's say we go to somewhere between 80 to 95K and we stop there. What does that mean? Now, believe me, I don't want this to happen. I would much rather have these crazy prices that I've heard of Bitcoin, $2 million and things like that. I mean, I would be extremely happy if that would be indeed the case. But it's important to be prepared for when things also don't go your way. Because failing to prepare is preparing to fail. Very simple. Now, let's say that Bitcoin, everybody's expecting 150K, 200K, 2 million, whatever. And if we go to 80, somewhere between 80 and 95K, and we stop, then what? Now, my plan is to be long enough, meaning that my position on my retirement bags is big enough that I don't need a 500-fold in order to basically retire and to create generation wealth. I would need, I don't know, maybe a 50 to 100x, and I would already be very well, maybe a 250x, and I'm done for life. And the more the prices stay in this range, the more I'm trying to accumulate, putting extra hours at work, using my bonuses, doing some side business also, some things on the side. So that is what I'm doing right now. So I don't need, Bitcoin 200,000 for me to succeed. So what I'm planning to do is, when Bitcoin hits somewhere between 80 to 95,000, it will depend a little bit on certain things. I will probably go into stablecoins, about 25% of my position, 20 to 25% to stablecoins. So DAI, USDC, USDT will be the ones that I probably will choose. Now, stables have huge counterparty risk on their own. Tether, as people don't like it, it seems to have been able to survive all these big drawdowns of billions of dollars at some point, and so far so good. But USDC has admin keys, so they can invalidate keys, can invalidate coins, and DAI has a lot of USDC and USDT, so if the other two go down, this one also goes down. So this is something that even if you de-risk into stables, I always have a strong finger on the pulse to understand basically if there's any possibility that these coins, will stop being stable and just depeg completely, and then the whole thing collapses, right? But I would take out this is what I'm doing. When Bitcoin gets to those levels, I will take about 20 to 25% of my stack out. Now, if Bitcoin hits my base case, which is around $150,000 to $180,000, then I will take about 50% into stables. Now, the beauty of this is if the price keeps going up, the altcoins, even during the bull run, always have big 60-75% drawdowns. So I will be able to, reinvest part of the stables if we indeed prove to go higher than this. So, but the point is, if we don't go higher than this, and if I'm right and this was the top, most of my stack will already be secured. So I really don't mind. Then the last 25%, 20 to 25%, or up to 30%, I will leave it for the what I call the Bitcoin moonshot. So if Bitcoin would go somewhere between 350 to 500,000, I would keep that at the minimum. And the reason why I would keep around 20-25% is if Bitcoin goes to those levels, I don't need huge amounts to be very well off. Why? Because that means that my altcoins are then going up thousands of fold. So I don't need, I don't need to have huge amounts of it, because just a little bit or just 20-25% will be good enough. In this situation, I'm protected against the scenarios. If we do stop at 80 to 95k Bitcoin, of course, there are going to be some certain signs, so I will be de-risking. And now the question becomes, to what? So to me, my first step will be stables. And then from stables, it depends a bit on how we are in the world. So, and how my situation also is. So let's say that I did very well. Let's say that I've, made $10 million, whatever. And the interest rates on short-term treasuries is 6.5%. That means that I can get those 10 million, put it on a money market fund, and I collect the closest to guaranteed income of about 600k per year, at least for 2 years. So, and by the way, if rates get cut, the value of those bonds also goes up. Don't forget, when rates get cut, bond value goes up. Why? Because if you go get a new bond, you get a smaller coupon, smaller interest. So the bonds that have higher yields will be more valuable. So that would be something I would consider. But why would I do this? Because taxes are quite taxes in the jurisdiction I'm in are quite beneficial. But this is me. And this is what I'm looking at. Why? Because if I have 10 million, I can collect 600k by doing nothing. I mean, that to me gives me a very comfortable life, of course. Then for the upcoming bear market, I would probably take 10-20% just to buy things that I wanted, and I would probably try to find some cheap real estate in certain locations that appeal to me. Enjoy my life a little bit, leave a big portion in stablecoins, depending on interest rates, maybe some money market funds. I would say when we have a bear market again in crypto, probably stocks will also sell off. So maybe not a very good idea to hold on to stocks during that 1 year. I would probably start when I see things. If there's a big sell-off in the stock market, I would probably start considering creating a group of stocks potentially related with artificial intelligence, but not the majority of my portfolio. And I would leave about 20% of my stack into crypto, basically in certain protocols where you can get yield, so the price is going down, but you're getting more coins as time goes by. So that probably would make sense to me. And on the off chance that maybe the cycles change, maybe we don't have such a deep bear market, maybe we have a shorter one, who knows? So it will depend a bit more in the future. So what I'm trying to say is I'll probably diversify across these lines, but it depends on several things. What are the interest rates at the moment? How are stocks doing? How did crypto develop? Maybe I never need to get out of crypto during that period. I mean, maybe I can just stay on the stablecoins, right? And just wait, and I don't need to go anyplace else. Maybe commodities. If we are in an inflationary period, commodities can make a lot of sense. But the point is, what I'm trying to say is, I already have an idea, depending on how things are doing, and depending on how well I do it. So maybe, if I have $100,000, maybe doesn't pay off that much going into bonds, into short-term money market funds. But if I have 5 million, 3 million, 10 million, then maybe it makes a lot of sense, right? Because it's, I would say it would be the lowest form of risk in the traditional finance world. But if people come and say, oh, but what about if the fiat currencies collapse and blah, blah, blah. That's what I'm saying. I will also leave part of it in crypto. Not stable coins, the other ones. Why? Because if that happens, if really fiat currency starts to lose value aggressively, the dollar starts to collapse, the euro, the yen, you name it, then I don't need a huge stack to benefit from it. So that is the key. This is where most people get it confused. You see, there is something called about asymmetric risk, which is crypto is very risky. Yes, but if I'm right in the choices that I made, I don't need much money to radically change my life. So that is the big advantage of crypto. But the point is, I will always be protected around those things. So guys, I hope that I've clarified what I'm looking at. But again, not financial advice. I cannot stress this enough. This is what makes sense based on my financial position and based on the jurisdiction that I live. Okay? Maybe in other people's case, is a complete opposite. I don't know. But in any case, guys, thank you very much for the patience, and I'll catch you in the next one.